Hello, everybody. I think I'm speaking next. The board outside is different than the running sheet. Is Canuck Resources here, and are they presenting right now? Because I'm a fill-in presentation. So please forgive me. The event organiser said that we have a block, a cancellation. Would I be happy to fill in? I said, absolutely. As you may learn, and I will speak slower. If you need me to speak slower, forgive me. I work with a fund manager in Australia. We are one of the largest investors in the junior resources companies. Junior meaning the little ones. And we are here to find companies to invest in like yourselves. And so what I'm doing now is just sharing some of our ideas and information and wisdom for how we invest in the junior resources part of the market. And the junior resources, I'll just call them juniors, these companies out there are very exciting. I invest personally, I love these stocks, I invest in them, but they come with risk. The key is to be diligent, do your homework, do your research, and you're already in the right place. You're right here. So in the few minutes that I've got available, and if you are the next speaker, put your hand up so that I know you're here. I don't know how much time I've got. But in the few minutes I've got, I hope to share some thoughts and ideas to you. And then please come and talk at the booth. I've prepared a checklist, your personal investment checklist. This is 30 years of the wisdom, the ideas, the best ideas of what we as individuals, so not as a fund manager, but individuals. So we always put the disclaimer and say that this is not financial advice, do your own research, you know that one. But come and talk to me, there's a checklist, and also there's lots of information at our booth. So the theme of today is ask better questions, to learn, to discover, to find information, to find the stock of tomorrow. This is the button for advance. The thing we've got at the bottom there, better questions lead to better outcomes. If you can imagine a chicken coop, and there's 100 chickens and 100 grains of wheat. In the share market, 99 chickens are chasing 10 grains of wheat. But there's one chicken over there, he or she have got 90 of the grains of wheat. That is our investment world that you've got. Most of the money, most of the people are chasing the same few stocks. For those who spend time to do their research at the very small resources end of the market, you can win. You just need discipline, you need your own personal checklist, and you need to understand your behavioural type as well. Terrific. I think that says in German, Deutsch, that not everything that you think is gold is gold. And in our industry, that is correct. You can get so excited about the best story, the best idea, and nothing happens. And sometimes for no reason. It might truly be the best story. And a key part of that is time. So you need information to find out, is it a good company? You need to understand your own investment behaviour type to see if you've got any biases or errors sprinkling into your investment decisions, and you need to give your investment time, especially in resources companies. That little cowboy, 20 years ago, 10 years ago, there used to be, we call them cowboys, the people who ran the companies, the men and the women, they might have been driving a bit too fast, cowboys. Most of that has gone away. These are very talented, very skilled people. There's good corporate responsibility and oversight. You can have confidence in the companies you invest in. Here's an example. A friend came and said, I found a stock, it's the most amazing thing, I'm in. 6 months later, he comes out, I said, how did you go? He said, I lost all my money. I said, well, that's the nature of the industry, it can happen. I said, what happened? He said, well, if I had just run the company, I would have asked a question, they would have given me an answer, and I probably would have connected the dots to see this company was going out of business. And I'll explain a little bit about there. One of the things about the fund manager, now remember I've taken the hat off, I'm talking as an individual, not the fund manager I'm working with. But when you're a fund manager, you have big amounts of money. We might want to put €1 million, €2 million into a company. You as investors can do what we can't. €10,000, €20,000, even €5,000 can be invested. That's too little for us. And so you can be more nimble, more agile. This is the checklist and a folder. For every investment you have, I'm not going to ask for a show of hands, but it does not matter how ratty or torn your folder is, but you must have a folder with a checklist stapled to the front of it. If you are investing in shares and you do not follow a structured process, your emotion will lose your money. You will still make money, but you won't make as much as you can, and you might make some errors. Please develop your own checklist or use one like this and have a folder for every investment. Very important, and you can see those points there. When you invest, there's two types of return. There's capital growth and there's dividends, there's the income. So know, what money am I playing with? Is it the inheritance? Is it the money you will need to pay the school fees for your children or grandchildren in 6 months' time? Know what money you are using and know what you're looking for. If you're looking for income, you're probably not investing in the right place. Resource stocks is capital growth. What return is an important thing. I sat in an investment committee meeting, and we had a company come in and present to us. The portfolio manager comes out. I said, what was it like? He said, best company. I have not heard anything that good in years. I said, are we going to invest in it? He said, no. I said, why not? He said, I've already got a bucket full of stocks like that. The point on that is, and we'll come to a picture at the very end on what return do you expect from this stock. As fund managers, they might pull a company apart. Let's say its share price is 50 cents. And they'll put the pieces back together and say, in 3 years' time, I think this company might be $1.30. They work their maths and they say that's 25% annual return, for instance. The maths doesn't add up. But another investment might be 40%. So know, what are you looking for? You might have two really good investments, but one offers a better return. Maybe it's been oversold or cheaper. So what return are you looking for? How long is your horizon? And understand a bit about yourself. These questions, this little list, and I've got lots of them, so come and grab one from me, talk about some of those questions. This is probably the heart and soul of investing in junior resources companies. What you are looking for a car that is broken down on the side of the road. You're looking for a car with a drunk driver. You're looking for a car with a flat tire, because a small thing can change the company quickly. So as well as good exploration discovery, sometimes you want the management as well. So pull the company apart, find out, is there an opportunity in there if they just fix something? Maybe they get an extra drill rig. Maybe they get a bit of extra capital. Maybe they bring in a geologist. What could they do to help this company grow in value quickly? And then other things you need to know. So pull it apart, put it back together. You're like the soldier who can do the gun in your sleep with your blindfold. Pull it apart, put it together. Know the company you invest in. 2 points there. Manage a track record. A lot of resources companies, they don't have much money. And so it's hard to pay management. So if your management don't have any equity or skin in the game or opportunity upside, they won't be as motivated. So you want to find a company where the people running it will share in the success. It's not a problem if they've got options or warrants. You want them to be motivated. If it's just a salary and they don't own shares, what's their motivation? And that's that alignment question. This is where we especially get focused in resource companies, and this is where you do have to do some learning and do have to get the education to understand the stages of the projects. How early is it? How development ready are they? How long before they can be in production? Have they started drilling or are they soon to drill? And then there's the other parts of it, the quality of and all those things there. An example is, we might hear a company says, I have gold, I have 1 million ounces at 10 grams. And another gold company says, I've also got 1 million at 10. This one has a market cap of 100 million. This one has a market cap of 1 billion. Why are they? So you need to look behind it. Where is the resource? Is it in the middle of Africa? Is it in the middle of West Australia? Is there water? Is there electricity? Is there petrol? How far will they ship or truck their ore that comes out of the ground? So you need to spend time, and this is the key of resources companies. Probably more than any other type of company you invest in, you have to be prepared to commit a lot of time. And so one of the points in this checklist is, well, how many positions can you manage at a time? Can you have 10 stocks, 15 stocks? Probably not as many as you think, because you have to be prepared to commit time. And the more time you put into it, the more success you will have. And that's sometimes all that glitters is not gold. Just so I know, is the next speaker here? I just need to know to manage my... You are there? And do you know how long before I'm finished? Because I don't want to steal your time. I'm filling in for a vacant space. 2 minutes, all right. Know the money. So with a resources company, what the company wants to do is they want to have paved road in front of them. When we invest in them, we don't want them to be sitting on 5 years cash. That means they raised too much money. Raise a little bit now, do some exploration, develop, raise later. So you need to find a company that doesn't have too little. And this was the example of my friend. If he'd have just looked in the paperwork that the company announces, he would have discovered they were about to raise capital. And as happened, they couldn't raise it. They went out of business. So know the capital, know the dollars in the bank, know how much they will need, when they will need it. We as investors have additional money ready to top up as they need and provide them capital along the way. There's two parts for the jurisdiction. That's where the investment is. There's a lot of good places in the world. There's a lot of fingers crossed places in the world. One of the interesting things is there are some really good countries. So a good jurisdiction for us in Australia is Vietnam. Very safe, secure, good governance. We can have confidence that the company will be supported by the government. The problem is no investor in Australia cares. The perception is, I'm not going to touch it, it's too risky. So yes, you do your research on the jurisdiction to find out, are they supportive of the development? But no one cares about it and the share price suffers. So again, this is part of doing the research. And there's a few other bits there on understanding how the share trades, how much volume is there in there, how much can you buy? Will $10,000 move the share price? Can you sell your 10,000 euro when you need to? So spend time looking at that. Investor relations is an interesting one. You want the company to promote themselves, tell the story. But this comes back to that car, perhaps with a flat tire, the best kept secret that no one's telling. If they bring on a person, if they start talking and tell the story, fix the flat tire. So sometimes you want, if you're not in the company, maybe you don't want them to be doing investor relations, but when you are invested, you want them to tell their story. The last part, just finishing up now then, is pick up the phone, ring the company. These directors and the people who run the company love what they're doing. They love to talk to shareholders. I work with a company, his philosophy is I need one new shareholder a day. That's what he wants, grow the company. They will take your phone call, they will tell you everything about it. They'll only tell you what's publicly available, but a lot of that information no one knows. They're not good at telling the story. You truly can ring up any company, talk to them, they will tell you about their project. And you can do that here as well, of course. So with the checklist, engage them, have a checklist, have a process. Talk to the companies and have focus, because it's their money, but it's your money as well. How are they managing it? Better questions, better returns. Does anyone remember this little computer game we played at Yes, the Frogger. For those who don't know, you get the frog across the road. Cars and trucks and water go in different directions. Sometimes you have to go backwards to go forwards. Sometimes it's all right that a share price goes down, or the company spends a few months consolidating, getting ready for the next stage. What you're trying to do is get up there, and this comes back to the rate of return. If you buy a stock And you can sell a stock to get into something that's going faster and then go back in. You've just got to focus. So there's nothing wrong with selling good companies ready to come back in later. Always keep one share. They'll stay on your register. So when you sell your shares, keep one. You're on the share register. If they do a placement or a share purchase, you can top up and you're getting all their information. But timing, and here's the resources. You can talk to a fund manager. Actually, our fund manager is handsome man right there. We love to talk. We're here looking for investments too. We love to talk. I'm at the booth. Come and get a checklist, the capital. There's so much information because just finishing it off, there we know it's finished. It truly, the investment community for investing in resources, look, what do we got, 30 people here? So few people invest in it. And so those who have discipline, do their research, do their work, and monitor their investments, you will make money. You'll lose things, but you should make more than you lose. Wonderful sector. I've taken more than 2 minutes. I'm apologising. Oh, also, we're giving away some silver prizes. So when you grab this, you might win silver. So come and talk to the people at the Lowell booth later on. Thank you very much. Thank you.